And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge Show, the show where we bring you where the action is in the broader markets. Lots to unpack this week, quite volatile. We are going to jump in as soon as we take a look at some of those news items that drove price action last week. And certainly front and center is the fact that the US government shutdown has ended. We'll take a look at how that impacted particular areas of the market. Also, we did see a move away from AI-related stocks. We're going to get into that and talk about money flows, where they are flowing elsewhere. Comments from several Federal Reserve officials. 4 of them were out speaking publicly, and they had a very hawkish tone relative to their meeting coming up in December. And it did skew the markets as well because a lot of the talk was around the possibility of no interest rate cut. So that was certainly quite impactful. And then we did see data fears emerge from that government closure. So let's go ahead and jump right in, take a look at these markets. One last note, Nvidia will be reporting their earnings next Wednesday after the markets close. Here we are with the daily price chart of the S&P 500. And certainly you can see the volatility that shaped price action last week. We did end mostly flat. Of note is we want to pay attention to the close in the S&P 500, and we did close the week just above that 50-day simple moving average, sitting here at 6704. The market's closed at 6734. We'll take it. However, the RSI did dip into and close below negative territory, or in negative territory. We can see that dip that took place later in the week. And we do have that MACD remaining up here in positive territory. Now, let's take a look at the NASDAQ. It did get hit a little bit harder. And here we are with this move lower. Certainly a lot of technology names were impacted. We did have that RSI in negative territory as well. And taking a look at that close, we just inched to a close back above that 50-day simple moving average with a positive MACD. Now, from here, we're going to take a look at the sectors. There is a lot of variance between the top performing areas last week and those that struggled. So we are looking at a 2-month daily price chart view of the 11 sectors in the S&P 500. We have that relative strength indicator so that these sectors are sorted by relative performance. And I've talked about this in the past. It's not a whippy view. It is something that you want to pay attention for those industry groups up here at the forefront as they potentially begin to descend into this weaker lower quartile. And then likewise, movement from this weaker area up into the forefront. And that is something that helped us develop and get on top of that move into healthcare stocks that took place last month. So let's go ahead and take a look at XLV. It was up about 4.5%. You can see that nice base breakout. And a lot of this is not so much a flight to safety. It could be some of the movement, but a lot of it having to do with strong earnings. Certainly biotechs are there in the forefront, a lot of new drug developments and earnings beginning to emerge there as well. So that is good news if you're looking for an area and a rotation into a newer group. When it is earnings driven, you certainly can anticipate a more prolonged uptrend. Let's take a look at energy. This is XLE, and it's setting up here really quite nicely. Last week, I did talk about natural gas. We're going to take a quick look at that again, and I'm going to share with you some energy names that are sitting up here really quite nicely, a nice bullish RSI. And then we have that MACD up here in positive territory, trending upward. From here, let's go ahead and take a look at technology. It did end the week mostly flat, but you can see that relative weakness, certainly compared to healthcare and some of the other areas, energy. And we can also see that technology does have a negative RSI. We did end with that negative RSI last week as well. But of note, again, taking a look at that 50-day simple moving average, we did close just above that. Certainly good news there. We do have a MACD that is trending downward, but still in positive territory. But net, you can see we've had a generally difficult period among some of these tech names of late. Also taking a look at some of these other areas that have been weaker. XLY, this is consumer discretionary, got hit really quite hard. A lot of this movement to the downside, certainly on Thursday, having to do with auto stocks, Tesla among them, but most of these auto stocks did get hit. That talk as far as interest rates potentially not being cut is certainly one of the reasons with that decline in autos, because of course auto loan will remain relatively high. And that's certainly one of the weakest areas among this consumer discretionary. We can also take a look at the communication services area, which also has been trending downward since this mid-September peak in price. We are now below this 50 days. We have been with a negative RSI and a negative MACD. We're going to take a look at the M7 names as we move through today's show and take a look at two of the heavyweight names in that communication services area. Industrials did get hit as well. Thursday into Friday, the group was flat today. Otherwise, rather mixed in the industrial sector with general weakness. MACD now in negative territory with that RSI. So there are certainly very, very small pockets of strength, but net, we've lost that upside momentum in the industrial area. And one other area that we can take a closer look at is the financial sector, XLF, and we had entered into a very nice uptrend on Wednesday with the move back above that 50-day simple moving average. However, we did recede, all about that interest rate outlook, pushing down some of these financials. From here, let's go ahead beyond these sectors and take a look at ETFs that are going to help drill down even further as far as what really took place last week. So I have several ETFs that I find very powerful. We have a 2-month daily price chart view, again, sorted by that relative strength. So I talked about healthcare's healthy move last week. Let's take a look at biotech up here front and center, and it has been on the move higher for several months now. We can see this big move higher took place earlier this week and retained that uptrend. From here, we can take a quick look at a weekly chart of the biotechnology area, and you'll see this very sharp advance. But I'm highlighting this longer term chart because we could see further upside. We are poised for a potential 1-year plus base breakout. And on that weekly chart, we do have constructive MACD and RSI. Let's go ahead and take a look at gold. It did tumble. This is another interest rate related type of a pullback. We did enter the week with this nice uptrend I talked about last week, this leveling off that we did see consolidation shaping up and was anticipating a move higher, but we did end the week a little bit lower. We were on the cusp of this black line up through the red, which oftentimes does signal a new uptrend. So we'll see if we can regain that. Again, it's going to have a lot to do with that interest rate outlook. Next Wednesday, we will get the comments from the FOMC, their latest meeting that took place last month. So that certainly could provide some clues. Let's take a look at alternative energy, in particular solar stocks. This has been a big winning area. And what I wanted to highlight here is the fact that we did retain a bullish RSI, and we did see some bottom fishing taking place today. We do have a positive MACD. From here, take a look at these bank stocks. This is going to be the regional banks, and they have not been faring well over the last 6 weeks. The banks names that are doing well are going to be those bigger money center banks that do a lot of M&A activity and have other sources of income beyond lending. So if we take a look at semiconductors, this had been a superpower area. You can see that we did begin to stumble a bit here last week, and we did decline further this week with the group down a little more than 1.5%, but we do now have that negative RSI with a negative trending MACD. And you also want to pay attention not only for these industry groups, but for individual stocks. Take a look at those volume characteristics. As many of you know, my background for over 15 years was with William O'Neill and Company, and he is renowned for being able to highlight and pick trends as far as to the downside or otherwise, and oftentimes taking a look at the volume on those down days, really taking a close examination to see, are the institutions exiting? And that could in fact signal a trend reversal. So we are holding firm here at that 50-day simple moving average. We closed at 288. This 50 days at about 282, but certainly very tenuous. We have that negative RSI. Longer term investors are going to want to keep an eye on that weekly chart, and that will help certainly keep you in a particular stock or a group. This is the semiconductor group, and it does not in any way look threatening on that longer term chart. We've simply come out of an overbought position, very standard given this sharp advance. So some other areas that you'll want to be aware of as it relates to the markets is the move in interest rates. This is the US Treasury yield, and we did move a little bit higher. We're up here at 4.1, but again, this is all about the interest rate outlook, and you will have many areas of the market that are going to be impacted by a potential rise in rates, certainly growth stocks among them. Other areas to keep an eye on here, retail really got walloped last week, and this is XRT, the S&P 500 retail ETF, and we did close the week flat, but generally in a downtrending phase. We talked about earlier this move out of retailers, and a lot of that having to do with many restaurant stocks that are performing poorly. They're seeing same-store sales growth slow as potential consumer spending is slowing down as well. Let's take a look at software. This area has really struggled, and we can see this move. IGV is the ETF that I use, and we can see the RSI down below 50, negative territory. We have already closed below that 50-day simple moving average. Take a look at this high volume. We do have that RSI and now that MACD in negative territory. A couple of elements here. Higher interest rates are definitely a negative for these software names simply because of their payment structures. And then also the fact that interest rates could potentially not be cut is a negative for that group as well. Let's take a look at the housing area. We did get a little bit of a brief rally earlier in the week, but net that downtrend is still very firmly in place. So from here, let's go ahead and take a look at areas that are seeing positive money flows as these high tech areas are trending lower. So we are going to take a look at the dividend aristocrats, and this is the S&P 500. The components of this list have increased their dividend every year for at least the last 50 years. So we are talking about higher yielding stocks and generally more defensive, but a lot of these names also have earnings. So here we are with a 2-month daily price chart view of the dividend aristocrat stocks from the S&P 500. And up here at the forefront, you will see healthcare names. This is CAH, and it had a nice gap up. This is all about earnings. We see higher above average volume, and it's on the bullish buy side. So good news there with that stock. We certainly are overbought, but it is notable. Another name, this is one that I have on the MEM Edge suggested holdings list. This is Johnson & Johnson. This advance into a base breakout that took shape last week is all about earnings. We had that nice MACD crossover, black line up through the red, sitting up here quite bullishly. Other areas that are on the move that you may not be aware of are some of these areas of transportation. This is Expeditors, EXPD. They do logistics for the transportation space. Again, all about earnings, gapping up into a very lengthy base breakout. High volume. We are seeing advances in some of these rail stocks and truckers as they are beginning to report numbers that are constructive after a very weak period. CB, this is an insurance stock, Chubb, and you can see this sharp advance that's been taking place. Now, I'm not going to go through every single chart, but certainly energy up here at the forefront. I did want to take a look at Coca-Cola. This is a company that last week a viewer did have a question about it, and it is in a very bullish position here. This is all about the company's share buyback program that's been reviewed as quite constructive in that case. The number of shares that are publicly traded is reduced, which is generally constructive. You can see positive momentum taking place there. Taking a look at some of these top names here, again, without going through each individual name, but I will highlight that there are a number of healthcare. This is AbbVie. We have Medtronic sitting up here. Again, this list is sorted by relative outperformance. Let's take a look at Abbott. It has been a laggard, certainly given that some of these other big pharma names have fared really well, but price action this week points to a new potential uptrend. We closed back above that 200-day simple moving average. We have that RSI now in positive territory, and we've had that nice bullish MACD crossover. Now, from my work, I would want to uncover the reason for that advance. Is it fundamentally sound? Is the company growing? And when you can marry those characteristics, it is certainly a very interesting looking stock. Let's go ahead and look at the M7 names. And what I wanted to highlight here, talked about communication services struggling. Let's take a look at Netflix. Now, this is in response to their earnings, that gap down, and they did appear to be in the throes of potentially reversing that downtrend. I would have liked to see the move back above that 50-day. However, it was stalled. You can see the stock was down about 3.6% today. Apparently, litigation, some type of legal issue did come out today. So Netflix is a big holding of XLC. We can see Alphabet, another big holding, has been holding in relatively well. And by that, I mean that we have pulled back, not as much as some of the other bigger tech names. You can see that that RSI is trending lower, but still up here in positive territory. Another name that I did want to share with you is Meta Platforms, and this is the stock's sharp decline took place after the release of earnings. Huge spend going into AI and fear that that is going to reduce their overall profit. You can see that the downtrend is very much in place, even as we enter into an oversold position on that daily chart. We did see a little bit of bottom fishing, but nothing certainly worth noting as it relates to a potential downtrend reversal. Microsoft, another name that struggled after the release of earnings, initially had a gap up. The numbers were quite good. However, since then, we can see this pullback. Take a look at that very high volume on that selling. I did get a question relative to should one buy on the dip given that the earnings were good. And in my response, it was all about this very high volume that was taking place on the selling, which in turn did push that RSI into negative territory. Tesla, I talked about auto stocks getting hit. Here we are with that sharp decline, and the stock was down 5% for the week. I talked about Bitcoin. Another area that I wanted to talk about that is moving higher, and we'll talk about why, and that is steel stocks. Of note among these steel stocks is Nucor, NUE, and the company earlier this week, for the third week in a row, announced increases in the price of steel, and that is certainly supporting this particular stock. However, the move higher in the price of steel and other materials needed by these big construction names is hurting the AI data center construction stocks. Here we are with STLD, pulled back pretty dramatically. Let's take a look at EME. This is another big data center construction related stock, and you can see this gap down in response to earnings. Again, they did have strong earnings, but their outlook was relatively weak because of that increased high inflation is costing them for materials, and you can see the downtrend very much taking place. This is what I talked about as it relates to that move away from industrial. Let's go ahead and pivot to energy names, and we are going to take a look first at UNG. We've been looking at this certainly over the last 2 weeks. We're seeing this sharp advance, has a lot to do with the potential for what's being termed the big freeze. Certainly in Europe and elsewhere, there is anticipation that it's going to be a very cold winter, and that is one of the reasons that we are seeing a move higher in natural gas. Let's take a look at names that are involved in that space, energy stocks. And this is DTM, DT Midstream. You can see the stock did have a nice base breakout, nice volume, and then we also have bullish RSI and a bullish MACD. The company does have a 2.8% yield, and another energy name in that in the natural gas space is TK. And this name did already experience this nice base breakout. It's exemplary of the move that we've seen into the area. Another stock that is a little bit earlier in its potential advance. This is Frontline, FRO. We had that nice base breakout at the end of last month, a pullback, and then a regaining of that base breakout, generally bullish behavior taking place there. We looked at the semiconductor industry group, and it was definitely struggling on the verge of a potential downtrend. However, there are a couple of semis that are holding in relative certainly to their peers. And here we are with Teradyne, TER. The stock had a gap up, very strong earnings, and pulled back orderly to its 21-day simple moving average, RSI in positive territory, as is the MACD. And that is certainly very different looking than any number of other semiconductor names. Another stock that is holding up, SNDK, and we can take a quick look in at this particular semiconductor related stock, and it is very much in a confirmed uptrend. Last up, MU, another MEM Edge report name. This is all about memory, the demand for memory, and increased pricing. They've increased prices dramatically for these memory chips due to demand. So that's one area that is holding in well among the semiconductors. And then from here, we'll take a quick look at Nvidia again, due to report their earnings on Wednesday before the markets open. So we can see that this general underperformance that has been taking place. However, we did close the week back above that 50-day simple moving average. And of note, we did have a pullback going into the release of their earnings last quarter. And in fact, we do also want to take a look at this weekly chart, which is holding in well. This is what you want to do with your holdings. Be sure and take a look at that longer term chart before you make any decisions with your holdings. And last up, we're going to take a look at a couple of stocks. I'm going to call this buying on the dip. So with Stockcharts.com, with their initial interface page, you can request what's called the market movers and have this sitting here. You can watch this from, of course, the open on, and it's very telling as far as what is really moving on any given day. Oftentimes it can lead to themes, but within the S&P 500, the top percentage performers are listed here. And what I wanted to highlight is that we are seeing a little bit of bottom fishing in these oversold AI related names. So first up here is Super Micro, SMCI, not a pretty chart from my work, but certainly it did get into an oversold position. We're down quite dramatically from this peak in mid-October. So if you are inclined to take a look at names that have gotten oversold, you will want to drill down into an intraday chart. And I will tell you, we did see, for instance, with this particular name, buying into the open, but it did fizzle. There was not anything by way of follow through. This is a 15-minute price chart. Another name that did see a bit of buying after selling off is Oracle. It was not a top performer, but here we are into the open. Nice buying. The stock was oversold, but we can see not a whole lot of follow through that would indicate further movement higher. And then another name that did get hit of late is DELL. And again, on the open, we did see buyers coming in. However, it did fizzle into the close. So if you are of that nature as far as wanting to potentially trade intraday, you will want to keep an eye on the stock's movement relative to these moving averages. I use a 5 and 13 simple moving average. We did close black below that. And then we had that MACD get into negative territory, likewise with the RSI. So we, again, did not see follow through on the buying of oversold tech names. And that's it for this week. I urge you to take a trial of my twice weekly MEM Edge report. You will most definitely want to be kept abreast of movements in this volatile period for the broader markets, as well as individual stock selection. And go ahead and hit that like button if you like what you've seen. And have a wonderful weekend. I'm going to look for you here again next Friday.